You never want to cash in your investments because you think so and so is going to win or lose the election because we don't know the future.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Jake, thank you for having me.
What's new in the wonderful world of Cory Bittner?
Not too much new. Just seems like each day is passing by quickly, and we are approaching the due date for Cassie, so we're taking it one day at a time. How about you?
You're excited for baby Bittner coming June,
Yes, we are.
right?
Yes.
Right
June
around your
13th.
birthday. You told me the other day that you spent how long trying to figure out how to get the car seat in the car? I heard that's really hard, actually.
Yeah, I didn't keep track of the time, but it definitely felt like it was longer than it should have been. Fortunately, I had a neighbor that was able to help give me a little bit of a different perspective, so it was a good.
Were there any cuss words? Did you cuss?
You know, I didn't keep track of how many came out loud. There were definitely some that bounced through my head, though. But I got there. Got to keep it cool and under control. I know I can do it. Just have to be patient. Sometimes
keep it cool, Cory.
Yeah, that's right.
Keep it cool. What's new with me, Cory, is I got my book out,
Yes.
Retiring Right, Smart Steps for Exiting Corporate America. To the millions of potential listeners / viewers of Upticks, I would highly encourage you to go over to Amazon.com and pick up your copy today. Cory, I've got it in paperback. I got it in hardback.
Ooh.
And I got it ebook out there too, if you like to read on a Kindle. I got all three versions for you. I'm super excited. Now,
I'm excited for you.
Let's be clear here. The book is 150 pages. It's impossible to put every single nuance about retirement planning in a book. What I did, though, Cory, is I basically took 18 years of experience and thousands of meetings, and I simplified it into a guide to open up people's minds into things to think about, whether they want to retire one day or they're already retired. I think this book can serve both sides of that equation, and I'm real excited about it. As you know, it's been a long time coming. I asked one of my editors, I think I spent a year and a half roughly.
That sounds about right.
Working on this. Maybe not quite a year and a half, but it was a long time coming. You helped. I had a lot of help with the team. I had a lot of outside help with editors and a publisher. So I'm real excited about it, Cory. And I'll be pounding the pavement soon. Old school bootstrap, getting my book out there. So that's what's new with me.
Let's get you to be a bestseller. I know you can do it.
I want to do it, and I want to change the world. That's why I wrote the book. I want to help people with their financial literacy. I want to enhance their financial literacy, and I want people to understand it's about their financial plan and what's important to them. And hopefully this book serves as a little bit of a guide to do that.
Exciting.
That's what's new with me, Cory.
Coming
all right.
soon.
Yeah, it's ready. Go out there. You can if this whenever you're watching this, you either pre-order it or you order it. It's out there. Go get your copy.
Perfect.
All right. With that, Cory, let's dive into today's topics.
All right, Jake. My view of money. Your view of money.
Yeah. So this is from our friend Carl Richards. Cory, I feel like we borrow from his articles all the time. Guy's pretty good though, right? And I think he talks a lot about the psychology and the relationship with money. And I thought this was important to share. And I wanted to ask you a question, but I thought this was important to share with our audience. That the takeaway, though, Cory, for this is I don't want people to judge what other people spend money on. I'm going to tell you a story. Okay?
Okay.
And I want to hear your thoughts. So I think this was this year, actually. I was traveling with a group of friends on a golf trip. Shocker, right? Big shocker there that I was going on a golf trip. But we flew Southwest Airlines, and I paid a modest fee, Cory, to be able to board in the A1 through 15 right? You know what I'm talking about? The A1 through 15 in there.
Yep.
And I was given a super hard time by this group of guys that I was giving in. Oh,
Okay.
that's a waste of money. You spent way too much money on this, blah, blah, blah. My ticket was cheaper. But what was funny, Cory, is those guys wanted to sit by me on the plane when I boarded. So I boarded early and then they wanted to sit by me. So of course they did, right? So they wanted to mooch off of my upgraded status. And they also wanted to jab me for paying a little bit more to be able to board and sit where I wanted to sit. So again, it's all in good fun, like not a big deal. But I just want to encourage people not to judge what other people spend money on. You know what really matters? What really matters is that my financial plan and my retirement plan are in good shape. That's what really matters.
That's it.
But I want to ask you, Cory, there's no shame in this. Do you judge, and I do probably, but do you judge what other people spend money on?
I'm sure that I probably do, but I do have the awareness to try to avoid that.
Yeah, and I'm not talking about client. I don't judge my clients on it because you know why I don't judge my clients? Because I'm very involved in their financial plan.
Exactly.
So if their financial plan is going in the direction that they want it to go in, then whatever they spend their $5,000 a month, $10,000 a month, $20,000 a month on, it doesn't matter to me. So ultimately, it should be about aligning your money with your values and making sure that you're not going to run out of money. And then you can spend it on whatever you want to spend it on.
Exactly.
Doesn't matter. Who am
it's
I
that
to
simple.
judge?
And it doesn't matter what other people think, right? To your point.
I think though, yeah, you're right. It doesn't matter. But I don't know if I'm guilty of this. That's why I said is like maybe if I'm walking on the plaza, right, or in the airport, and I don't think I do though. Like if somebody has a Louis Vuitton luggage or a Gucci purse or whatever, I still don't think I judge people on that.
Good.
Yeah, I probably have, but I actually maybe I haven't. Like now that I'm starting to think about it, regardless, like you said, it doesn't matter. What matters is your financial plan and your money's aligned with what you value. That's all that matters in the end.
Exactly. And I think, Jake, real quick though, I mean, we do have the unique perspective because we talk to people about money all day long, most days of the week, and have for several years, that I think we have a unique perspective there. But I don't think that I judge. The habit that I have, Jake, that I probably should break is that I will be too quick to ask someone what something cost them when I probably shouldn't. But it's only because I talk to people about things like that all day long. I feel like somebody tells me they bought something, I'm like, how much did that cost? And then I recognize maybe not everybody wants to answer that question for me, especially if it's someone who's not a client.
Right. All right, Cory, let's go on to the next one here.
Yep.
How will the 2024 election impact your retirement? Hot topic, Cory, election coming up in November.
Yes. So it's the time of year, Jake, where during an election year where there are conflicting predictions that are made that are showing upsides and downsides in the market based on which party wins which branch of government. This is the time of year. This is what happens during these election years. So the financial media has people focused on investment returns, which is implying the ups and downs of a volatile year in the market can be timed to the benefit of an investor in spite of overwhelming evidence of the contrary. So what is an investor to do if they're concerned about the election, the impact that it has on their retirement or their portfolio? I think what they need to do is don't take the bait and fall prey to the emotional whipsaw of the financial media. Recognize that there are also a lot of other forces that are at play and have an impact on the market beyond just who's president in the election, like the government spending, debt, inflation, interest rates, et cetera, and ultimately have a plan.
Yeah, that's good, Cory. You never want to cash in your investments because you think so-and-so is going to win or lose the election because we don't know the future. And you're right. Markets persist. And so good. I love it. Don't throw your financial plan out the window because of a presidential election. You know what? They're going to happen every 4 years. And you know what? We're going to have good presidents. We're going to have bad presidents.
Yes.
And hopefully the economy, the market, capitalism, whatever you want to call it, moves on and persists. And you got to remember, in my opinion, Cory, all of this political thing, it's all about power. It's all about power for these people. But also these presidents' egos, they don't want to go down as the president that ruined the economy or that crashed the stock market. So you have to remember that these people, regardless of who you like or dislike, they want things to do well. They want the economy to do well. They want the market to go up because that makes them look good. So I think sometimes people get too emotional about it and they're like, so-and-so doesn't care and they want to crash the market. I don't think they want to do that. I think they're all in it, hopefully, to increase everyone's lifestyle and life and, make the market and the economy be healthy. And regardless of how emotional you get about it, it's about power, and they want that power to be able to control that and to boost their ego. But no one's trying to make the market crash. Why would they do that? It's just going to make them look bad.
Don't take the bait.
Right.
All right,
good.
Jake. Move over TurboTax. IRS considers expanding free tax filing program.
Yeah, so Cory, you brought this up on a previous episode that the IRS did roll out a free tax filing program that I think they had some success with it. But my question to you is, do we think this is a good idea for the government to get more involved? And why don't they spend money on making the tax code easier for everyone to file versus spending money on a complex software to make the complicated taxes able to be filed, if that makes sense?
It does make sense. If you're asking me the question, do I think it's a good idea? No, is my answer there. And to address the second part of your question, should they spend the money somewhere else? I'm sure they should. And I'm sure there's a reason they're not doing that. I don't know what it is, but I agree with you. I think we're aligned. What do you think?
Yeah, I just think, I'm not trying to say they need to put the accountants out of business here, but it's like, man, there's a lot of, they're hinting at a lot of time and energy and money going towards this software to help people file their taxes. Why don't they just make the tax code simpler?
I'm confident if that was the intent, it would have already happened.
Right. And maybe, and again, I'm not in there, right? I'm not in government and blah, blah, blah. Maybe it is not that simple to make it simple. Maybe it needs to be complicated because there's so many different scenarios and implications and whatnot. So maybe it has to be complicated and there's no way around it. And so good for the IRS. And I think you mentioned this, though. Wouldn't it be better if they just sent you a bill?
Yes.
And said, this is what you owe, and this is
trying to play the game to figure it out, and got to get it right, but we won't tell you what you owe. That part.
So good for them. I guess they're doing, at least they're bringing some attention to it, and they've realized that there's an issue there. And so hopefully that free tax filing software works. My fear is, just like most government programs, is that they're going to screw it up, and they're going to make it harder on people. And it's not going to actually be easier. That's what I'm worried about. So,
and I know we can't predict the future, but I am confident, Jake, that you are probably spot on there. But we'll find out.
So we'll see. We'll see what happens. Cory, marriage takes work, especially when only one spouse retires.
Yeah, this is interesting, Jake. So there is, I don't know if you read this or not. This was in the Wall Street Journal, but just humor me here, Jake, and give me a guess for what percentage of couples, that a poll that surveyed a lot of people, what percentage of couples do you think retire at the same time?
Oh, good. I didn't read this, so I don't know. I would say 60%.
11% retire at the same time.
11?
Yes, and that 2/3, really your 60.
Hold on, time out.
Okay.
And I know you don't know this because I didn't ask you to add this up. How many of your clients do you think retire at the same time? Do you think it's that low?
Yes. Like the same day? Yes.
Yeah, you're probably, I agree with that. Yes, I think you're right. Good point. Okay, go ahead. Keep going.
This did talk about, though, while that is one number that kind of stands out, another one that actually stands out here is that nearly 2/3 of people, so roughly 66%, stagger their retirements by at least 12 months or more. So at least a year apart, basically. And the reasons can be, there's a myriad of reasons, right? If it's caring for family, if it's healthcare, if it's delaying distributions, whatever it might be. There's a number of things that can ultimately cause that. But this article just highlighted, Jake, and I thought this was interesting because we work with a lot of clients that are retired or planning to retire soon, that this highlighted how tensions can surface when routines, schedules, and expectations diverge, when one spouse retires and the other doesn't. And the same is true for togetherness, where sometimes people get tired of each other if they haven't spent that much time together. And the takeaways from this article that they suggested, and what my takeaways were aligned with that, Jake, was just understanding what the expectations are, having joint calendars. I think retiring to something and not from something is really important in all of this. Open and transparent dialogue. But they also made the point, and I could see where this would happen, where it says, just don't forget about the demands of a full-time work if your spouse is still working and you're retired.
Yeah, and I think actually it's prudent from a financial planning standpoint. We have a lot of clients kind of ease into it that way where
Mm-hmm.
they're only losing one income. They're not losing both income at the same time. So from a planning standpoint, it can be beneficial. However, like you said, like I like that as a good point that you have to be cognizant that one of your partner or you, whoever, is going through a major life change. And it's not just financial, there's emotional things that you're going to need to work with together on your spouse on that. It's not just we lose their income and now they're happy all the time and go lucky. No, there's more that goes on to retiring than just the financial aspect of it. And you got to be ready for that
Absolutely.
as a couple. That's good. I appreciate that. That's a good one. Now, I disagree, Cory, though. Marriage is not hard. Maybe I got a cool wife, but I don't think, or it says marriage takes work. I don't think marriage takes work, Cory. I think it's easy.
We need to get Rachel on next week's show and ask her if marriage takes work.
I think she would agree. I think she would agree with me. Marriage is easy. So it doesn't take work. Anyways, let's go on to the next one.
I think Cassie would agree too. Okay. All right, Jake. Let's next here. Adults. Yes, adults are throwing half birthday parties.
Cory, are you on board? Do you know what a half birthday is? When's your half birthday?
Mine would be December 9th.
Yeah, and I think mine would be, what was that, like around November 27th.
Yep.
Do you celebrate it?
No.
Yeah, are we on board for this? I think it's stupid. Now, that's pretty judgmental of me, but for our listeners that maybe celebrate it, I want to know why, though. If you celebrate a half birthday, please email Luke at falconwealthadvisors.com and let us know why you think it's important, because I can't understand it. I don't understand it, why people do that. And frankly, if you have any question or topic that you want us to bring up here live on Upticks, please email Luke at falconwealthadvisors.com and he'll be sure that we talk it on today's episode. It's just an article. It's actually in the Wall Street Journal. I ran across this, that there's adults now doing this and they're going out and partying on their half birthdays. And I'm just like, why? I mean, anyways, I think it's pretty egotistical, personally. So,
yeah,
anyway.
I don't think I have much more to add. I did read the article too, and I just thought, after I read it. So,
okay, good. All right, let's go on the next. We don't want to spend too much time on that. Let's go on the next one. The Dow is a terrible index, but it is telling us something important.
All right. So the Dow Jones Industrial Average, an index that's made up of 30 stocks, it gives outsized weight to certain stocks, literally based on the share price of the company, not necessarily the market value of the company, which is what most other indexes do. So that's one sort of criticism that people have of the index itself, is that literally if the share price is $500 a share, it's going to have more of an influence on what the Dow does than something that's $100 a share, regardless of the market cap. But anyway, the Dow Jones Industrial Average, as this article argued, Jake, is a relic and is a measure of companies that used to be considered great, and that the S&P 500 is dominated by companies that are currently considered great. This is the point they were making here. But what I did find interesting from this, Jake, is that the Dow Jones Industrial Average in the last 4 years is having its worst period of underperformance relative to the S&P 500 since the dot-com bubble. And as recently as March of this year, the underperformance over the last 4.5 years between those two indexes has been 30%. So pretty significant. They pointed out in terms of timing, the smart move, what they should do when stocks are added to the Dow and removed from it. But the bottom line, from my point of view, is that what any one index is doing doesn't really matter. Because what really does matter, to the point that you were making earlier, is your portfolio performance and what that looks like relative to the target that your financial plan defines. But the S&P, the Dow Jones, NASDAQ, all of that, I suppose it's important to understand what influences that. But the reality is I don't think that should really be shaping how somebody's investing their money.
Right. And that's another reason, Cory, that we don't use index funds, because what if somebody put their money in a Dow index fund and thought they were doing the right thing? And like you said, it's underperforming by 30%.
Yeah, I mean, it will move and is influenced by the share price of the biggest companies, not necessarily their performance, the market cap, any of that. So yes, I think the point there is that in and of itself should not be we're not giving advice here, but that in and of itself should not be a specific investment strategy. But there really shouldn't be an investment strategy that's relying upon any one index. It should be about your plan and your performance and what matters to you. Everything else is noise.
Exactly. That's what we do. That's why at Falcon Wealth Advisors, we buy individual stocks and bonds and trade options, because we don't want our clients 30 years, 40-year career of savings riding on some arbitrary index. I think it's stupid to put your money in an index fund. Like, all I use the indexes for, Cory, is a general idea of what direction the market went that day, quarter, year, whatever. That's all I use it for. That's it. That's all. And that's all, in my opinion, that's all anyone should use it for. They should not use it as an investment vehicle. It's a general, we got to have something though, right? You got to have something, a barometer, some sort of gauge to know where's the general market theme. But you can have a portfolio that is up when the S&P is down and is down when the S&P is up. And you know what? There's nothing wrong with that. What matters is, how is your portfolio invested according to your financial plan? Like you said, that is the key component. And frankly, Cory, you might have brought up the most important topic of today's episode. So congrats to you.
Thank you.
But let's remember, don't get caught up in those. And I mean, Dow at 40,000, that's great. Does that matter to my clients' financial plans? No, it doesn't. It doesn't. What matters is, how are their investments doing, right? And how is their financial plan trajectory? That's what matters, not what some index does. It's kind of like, I don't know, I'm trying to, weather maybe weather patterns. Like, does it matter if it's raining in New York City to you right now? Like, right? It doesn't matter. That's just the weather. Or a front comes through, like, it comes and goes. But like, if I'm not playing golf, it doesn't matter to me if it rains that day or not. But if I'm playing golf and it rains, it matters. Like, so again, just like the individual stocks matter in our clients' portfolios because it's all built on their plan, the general theme doesn't matter. I don't know. That's kind of elusive. Do you have a better one? Like an analogy?
No, I think that's good. I was thinking while you were talking about the weather, Jake, about if I could come up with another analogy, but I don't think I can come up with another one. But I think the point there just holds true. It's like if somebody only looked at their portfolio once per year and they didn't see the day-to-day fluctuations in the market. Like, we've talked about this with the housing market, right? Like, the value of your home it really matters the day that someone else is going to buy it if you're trying to sell it. Like, that's what it boils down to. So what the Dow does and what your portfolio does doesn't really matter. What matters is, what are your investments doing as far as your financial plan goes? And that's it. But just trying to, stay on top of it and track all of it on a daily basis is a great recipe for a lot of unnecessary stress.
Yes, exactly. You don't need that stress. So why put it on you? I remind my clients that, like, hey, if you're worried about the Dow or the S&P, let's talk about your portfolio. Let's not worry. Let's check in on your performance. That's good.
Yep.
All right, good. We got time for one more, Cory.
All right, Jake, here's what goes into your mortgage rate.
Yeah, so I got some thoughts on this. So I didn't know this, though, Cory, before I read this article. And maybe I just never cared. But did you know mortgage rates vary by state?
Mm-hmm.
You knew that?
I knew that.
How did you know that?
Don't know, but I did. That's the only answer I have for you.
And I think Missouri is actually some of the highest, believe it or not. So currently, though, banks, according to this article, banks right now have the highest rates, followed by mortgage lenders, and then credit unions are the lowest. Your credit score will impact your rate as well. And my point is, it pays to shop around. When you're getting a mortgage, all that really matters is the rate and the fees, whatever that you have to pay. There isn't much going on after that. So it doesn't matter if, your cousin works at a bank and other than wanting to give them money, but they're not going to service it. It's a transaction. It's a very transactional situation. So we want the lowest rate. That's all we want. That's all we care about. We want the lowest rate, period. Not a lot of service going on after that. My problem is, Cory, you know how they've really accused the real estate agents of being in collusion and artificially keeping prices higher because of their commission structure? If mortgage rates are based loosely on the 10-year treasury bond, which is, 4.5% right now, roughly, why are mortgage rates at 7%? Like, why can't somebody sweep in and say, I'll do mortgages at 6 or 5.5? Or maybe people are doing that. I don't know. But shouldn't the point of capitalism and an efficient market be driving those rates down because of competition? Or do you think all these banks, credit unions, and mortgage lenders artificially keep that rate a little bit higher? Like, why? Like, what's so keeping you from opening a mortgage company? Say, you know what? I'm going to do mortgages at 5.5% right now. And you would just, you would think you would just rake in the business.
Mm-hmm.
But I don't know. Do you have thoughts on that?
Yeah, I think there's part of it just has to be the risk, right? If I were lending money, Jake, to you as the mortgage company for 30 years, for example, like I understand that there's some thoughtfulness that needs to go into the risk that the lender is taking. But I hear you loud and clear, and I do not disagree with your point, because I think that, the spread basically above and beyond whatever the rate is that, more broad interest rates are set at. I think that spread doesn't always need to be as large as it is, but whether or not, I mean, in a lot of ways, if every bank and credit union and every institution that's going to make a mortgage loan, has a floor for what their rates are, theoretically somebody could come in and disrupt that. But I suppose there's probably a reason that no one has, would be my guess.
Yeah, because they're in collusion.
And that could be it.
Conspiracy theory started here, Cory. Started it here. We'll see what happens.
It is interesting, though. And you know what? The other thing that I think is interesting about that, though, too, is when we do take a step back and look at mortgage rates and borrowing money for 30 years and the rates that are applicable today. Yes, they're higher than they've been. No, they're nowhere near as high as they've been previously. But I do think that the context of all of it is the fact that home prices have gone up a lot. So if somebody's borrowing $100,000 at 10%, or they're borrowing $600,000 at 4 or 5%, of course it's going to make a difference. But anyway, I just think that the interest rate is one part of it, but the price of the house is another.
Right. And they're both higher now, though.
They're both higher, exactly.
Like, they're both higher. And like, I think prices are too high for homes. And I don't think rates are too high, but I think they could be lower. Like, my point is, I would love to see somebody enter the market and narrow that spread. Because again, I don't think you need to, like, I get it. If you have to pay staff for ongoing service, right? But these mortgages, it's transaction for most of them, right? So it's like, why wouldn't you just come in and beat somebody on the price? I don't know.
Well, and the bigger point, though, that you're absolutely right about is that's why people should shop.
Yes. Yeah. And that's really the takeaway, is that, don't feel like you just have to go to your bank. I got a great rate through my bank, though. So again, I don't want to beat up on the banks here. Like, when I bought a house this year, or closed last year, whenever, anyways, within the last 6 months, and I got a really good rate from my bank. So I don't think, or a bank, it's not even my bank, but I got a really good rate regardless from a bank. I didn't have to go to a credit union. So you don't have to go to a credit union, but you should shop it. Definitely should shop it. That's the takeaway.
Yep.
All right, good, Cory. We're going to wrap up for today's episode. Thank you again for joining me. Thank you all for tuning in. As always, please like and share our content. The whole point of Upticks is we want to enhance financial literacy. Please go out there, buy my book, Retiring Right, Smart Steps for Exiting Corporate America. Maybe, Cory, hopefully, I want people to find 1 or 2 things that they haven't thought of in this book that will enhance their lives and help their financial plans be that much better. So thank you again, as always, and we hope all of you out there have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.